channel today, guys. My name is Chris. Today we're going to talk a little bit about Tesla. We're going to go over their whole Q3 earnings report that they just released. I'm going to take you guys through it, kind of break down what they've got going on and what's so exciting for the future for this company. See how much money they've got, see how much money they've lost, see how many cars they're producing, all kinds of spicy stuff. Guys, I'm trying to hit 100 subscribers this month. So if you guys would please hit that spicy like button, hit that subscription button, that would mean the world to me. So let's get into it. Alright guys, let's go over the Q3 2020 update for Tesla. So here goes the highlights. It says cash, $5.9 billion increase in our cash and cash equivalents in Q3 to $14.5 billion. Profitability, they had $809 million GAAP operating income, 9.2% operating margin in Q3. Operations, record vehicle delivery, profitability, and free cash flow. Build out of 3 new factories on 3 new continents continue as planned. First step of full self-driving beta rolled out, started October 2020. So the important numbers to look on this is the total revenues here. We had $8,771 million this quarter for our revenues. That was a 39% increase year over year and a 45% increase quarter over quarter, which if they keep doing this, they're going to soon hit that $10 billion revenue mark. Their operating expenses for this quarter were $1,254 million. That was a 35% increase year over year and a 33% increase quarter over quarter. So they're obviously spending more money quarter over quarter because they're opening up new factories and they're paying these people to build these factories. They now have cash and cash equivalents of $14.5 billion like we went over in the beginning. That's a 172% increase year over year. So they are smoking in cash. I mean, they have so much cash on this freaking balance sheet, it's crazy right now. They were just 2 years ago struggling to have so much cash. So it's good to see that they're healthy on cash and cash equivalents. It says the financial summary. Total revenue grew 39% year over year in Q3. This was achieved mainly through substantial growth in vehicle delivery as well as growth in other parts of the business. At the same time, vehicle average selling price declined slightly compared to the same period last year, and our production mix continues to shift from Model S and Model X to more affordable Model 3 and Model Y. So they got to drive down their prices on the Model S and the Model X and the Model 3 and still made more money year over year, which that's healthy growth. Operating income improved in Q3 to a record level of $809 million, resulting in a 9.2% operating margin. This profit level was reached while we took increased SBC expense in Q3 attributable to the 2018 CEO award, of which $290 million was triggered by a significant increase in share price and market capitalization. Positive profit impact included strong volume, better fixed cost absorption, and continuous cost reduction. Quarter end cash equivalents increased by $5.9 billion quarter over quarter to $14.5 billion, driven mainly by our recent capital raise of $5 billion. The average price of this offering was $449 a share, so they kind of hit it right on the spot because Tesla's been floating around that $450 range for a while now. So they took these shares at the right time, that's for sure. Combined with free cash flow of $1.4 billion and partially offset by reduced use of working capital credit lines, since our day payable outstanding are higher than our day sales outstanding, revenue growth results in additional cash generation from working capital. Their Model S and Model X production was about 17,000. That was a 169% increase quarter over quarter and about a 4% increase year over year. Last quarter, obviously, they were hit by the Rona and it did not help them at all. So those sales went way low. They were a more expensive line of cars, so it just makes sense for those sales to go lower because people were trying to save more cash at that time. But they still grew year over year, even though their main focus is the Model 3 and Model Y, which they produced 128,000 units this quarter, which I'm sure you guys know. And that was a 60% increase year over year and a 69% increase quarter over quarter. So production has just been getting with it here recently. Like, they've been growing and growing and growing. They've always made more cars than they did last year by a lot. And they think this is going to continue this way, around a 50% increase every year. They delivered 15,275 cars of those 17,000 that they produced, which was a 44% increase quarter over quarter, but a negative 13% increase year over year. And this is mainly because more people are opting into buying the Model 3 and Model Y, like I said before. They delivered 124,318 of those 128,044 cars they made last quarter, and that's a 55% increase quarter over quarter and a 56% increase year over year. They think this number is going to keep growing. Like I said before, this is going to keep growing around that 50% mark every year. They had 61,638 cars that were leased this quarter, and that's a 13% increase quarter over quarter and a 39% increase year over year, which is great for this company because leasing cars can make you a lot of money. So their solar was 57. That was a 111% increase quarter over quarter and a 33% increase year over year, which is good to see that they're still growing their solar operations with their car operations and not having to really take a lot of debt on to continue growing that. Their storage was a 759. That was an 81% increase quarter over quarter and a 59% increase year over year, which is another great number to look at because they're not only selling cars, they're also doing the solar and the storage, which really helps this company out, and it really justifies this company having such a large market cap as well. And their stores, they were 466 stores. That was a 4% increase quarter over quarter and a 12% increase year over year, which I wish they would make more stores because a lot of people have problems with these cars, and especially as there's more and more that's coming on the road, they're going to need more service locations for these cars, in my opinion. And the same with their mobile fleet. They have 780 now. That's a 1% increase quarter over quarter and 8% increase year over year. I think they're really going to have to ramp up their services and their locations because there's going to be a lot more cars on the road here come next year. I mean, if they're expecting to make 500,000 cars this year and close to 1 million cars next year, this number needs to increase a lot, in my opinion. So that's a little concerning for me. You tell me what you think down in the comments below about their services and their service fleet. They've been steadily growing their supercharger stations, which is great. They have 2,181, and that was a 7% increase quarter over quarter, 32% increase year over year. And this is exactly what I'm talking about. If there's more cars on the road, they're going to need more places to charge these cars. Vehicle capacity. We have recently increased our capacity of Model 3 and Model Y to 500,000 units a year. In order to do this, we restarted our second paint shop, installed the largest die casting machine in the world, upgraded our Model Y general assembly line. Production should reach full capacity towards the end of the year or beginning of next year. So they're going to be producing 500,000 cars out of Fremont by the end of this year or by the beginning of next year, which tells me that this company will for sure hit 500,000 cars next year. We're going to be getting close to that 1 million cars a year pretty soon, and that's pretty big for this company. Shanghai Model 3 production capacity has increased to 250,000 units a year. We reduced the price of the Model 3 to 249,900 RMB after incentives, making it the lowest price premium mid-size sedan in China. This was enabled both by lower cost batteries and an increased level of local procurement. As a result of the shift in cost starting price, we recently added a third production shift in our Model 3 factories. So they have the lowest price premium mid-size sedan in China right now, which really helps them compete against NIO. So they don't really have to worry about those companies outpricing them. Therefore, people are more likely to go and buy a Tesla instead of whatever NIO is making at the moment in China, and it's an American company, which helps out our economy, and that's good for us. Berlin factory. Construction of the Gigafactory in Berlin continues to progress rapidly. Buildings are under construction and equipment move-in will start over the next coming weeks. So that's good to hear that they're already starting to move equipment into Berlin factory. That means that pretty soon they'll start putting out little prototypes out of this factory and starting to see how many cars they can make out of Berlin. At the same time, the Gigafactory Berlin team continues to grow. Production is expected to start in 2021, which is great. That means this company, it just makes me so happy to see this because I have a feeling they're going to be able to make 1 million cars next year, in my opinion. And I might be a little bullish on it, but it is what it is. So they have their full self-driving that was released in October, this month, 2020. And as they continue to collect data over time, the system will become more robust. So over the next, I'd say, 6 months to a year, this full self-driving will be released to more and more people, and it'll get better and better very quickly. They also upgraded their vehicle software, so it's harder to hack and easier for them to work on. This also updates the suspension comfort, updates Powerwall to vehicle charging coordination, and added to automated window close function and glove box pin access. Our Model Y all-wheel drive customers can now purchase $2,000 software update that improves 0 to 60 time in just 4.3 seconds. There is no slow Tesla, that's for sure, guys. On September 22nd, they hosted their battery day, which they went over. We're not going to go over it right now, but pretty much it reduces the battery pack cost per kilowatt hour by 56%, which is a massive reduction in kilowatt hours for this battery pack. I mean, there is no better news than that. I mean, they've created a whole new battery and redefined what a battery is. They ultimately believe that their power business will be as large as their vehicle business, and I have no doubt about this. It might take another 5 to 10 years out, but this is a massive business, and this is going to be massive for them. If they can just lower that price of that roof down, it's going to be great business for them, and they're going to make a lot of money on putting these solar roofs on. Their total solar deployments more than doubled in Q3, which is awesome. Like I said, they're going to keep growing and growing. So here's what they're kind of thinking for the future. Volume, we have the capacity installed to produce and deliver 500,000 vehicles this year. While achieving this goal has become more difficult, delivering 500,000 vehicles in 2020 remains our target. Achieving this target depends primarily on quarter-over-quarter increase in Model Y and Shanghai production, as well as further improvements in logistics and delivery efficiency at higher volume levels. So they still think they can deliver 500,000 cars this year. Cash flow, they say we should have significant liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. So they said that they have plenty of money on the balance sheet to do whatever they want with, and wherever they need to put that money, they're going to put it. Profit for the trailing 12 months, we achieved an operating margin of 6.3%. We expect our operating margin will continue to grow over time, ultimately reaching industry-leading levels with capacity expansion and localization plans underway. So they're making profits. They made more profits this quarter than they have in the last 3 quarters or 4 quarters now, and so they're killing it on the profits right now. And product, we are currently building Model Y capacity at Gigafactory Shanghai. Gigafactory Berlin and Gigafactory Texas remain on track to start deliveries from each location in 2021. So they're ready to roll. Berlin and Gigafactory Texas are going to be ready to roll next year. Tesla Semi deliveries will also begin in 2021. We continue to significantly invest in our product roadmap. So that's great news. They're going to have Model Y, they're going to have the Cybertruck, and they're going to have the Tesla Semi all coming in 2021, along with very fast, rapidly increased growth on Model 3, and the Model Y is also going to be a top seller. All these numbers are just massive, and this is just great growth for their battery. I mean, obviously Tesla runs off of batteries for solar energy and for their cars, and the most important thing around this company is to have a great battery, and they are succeeding beyond anybody's imagination with what they could do with the battery in just a few years. Here's some photos for you guys. I mean, look at this. This is Gigafactory Shanghai. This is where the Model Y and Model 3. I mean, look how huge this place is. I mean, this is absolutely crazy. There's another Gigafactory Shanghai on the inside. Look at these little guys here. Gigafactory Shanghai in operation. Shanghai's paint booth. And here's Berlin. Obviously, you can see that they're almost ready to put their equipment in these buildings and start putting out prototypes and seeing what kind of production they can get out of this place. Hopefully, it's a good amount. And Gigafactory Texas. They've broke the ground here, and they're ready to lay the foundation and start building this baby up. It's going to go quick just like the rest of them. and the Megapack project at Moss Landing. So I love looking at these charts right here. The vehicle deliveries, I mean, just look at Q4 2017. I mean, they barely were making 40,000 vehicles. I remember this quarter right here, Q2 2018, whenever they did hit 40,000. And then boom, Q3, bam, they made over 80,000, and now they're making almost 140,000 vehicles a quarter, guys. So, I mean, look at this exponential growth. I mean, it's over 10x in the last 3 years. How crazy. Here's their net income right here. Back in Q4 2017, they were losing crap tons of money. And 2018 still losing money. Everybody said Tesla's going to zero, they're burning too much cash. And then they hit a profit, and then they back down to the not making profits again. In the last 1, 2, 3, 4, 5 quarters, they've been profitable, which makes the S&P 500 kind of spicy feeling, because I mean, you can't deny 5 quarters, and they're one of the largest companies in the world, so they're gonna get put in the S&P 500, I think, this quarter. And hold me to it. We'll just have to see. Put it down in the comments below. What do you think? Are they gonna get put in the S&P 500? Is the committee gonna let them in finally, or what? They made crap tons of profit this quarter. That's good. Almost $1 billion. And that looks like it's all, guys. Well, there you have it, guys. We went over their Q3 earnings and all kinds of crazy information they have released. We found out that their solar panel operations are going to be just as big as their car delivery. How exciting. We figured out that they have almost $15 billion on their balance sheet, which is absolutely mind-blowing. It makes this company just worth so much more today. I mean, they're not going to go burn all through all this cash. They're not going to zero no more. They're going to 500. Leave it in the comments down below if you think so too. Thanks for joining the channel, guys. My name is Chris. That's all for today. Hit that spicy like button. Hit the subscribe button. We're trying to get to 100 subscribers this month. That's all for today. Peace out.